Okay, so yeah, so anyway, the idea is that we get lost a lot of times, whether our emotions get out of whack, whether we're just struggling emotionally. Like, I've been very open since I've joined Oasis years ago that I struggle with anxiety and depression, and I have since I was 10 years old, maybe even younger, but I definitely remember 10. So, things like that can mess with your trading psychology just because you can get fundamentally out of whack. Like, I would wake up in the morning and just not want to be awake, not want to be alive, not want to be around, just kind of want to disappear. So, that's one of the challenges for sure. But if you can struggle with things like that, that can make things difficult to be sure. You can struggle with losing. That can be hard because you can go through a losing stretch where you just aggregate a bunch of losses, and typically you'll want to go back and reevaluate, why am I taking these losses? And if you're journaling, that can help. I would say that most losses for most traders since the first of the year are probably due to improper sizing, just because there's so much volatility in the market. I mean, it is absolutely insane. If you are trading with many contracts right now, and you don't have like a 150K account, and you're oversizing. If you look at and here's the thing, guys, it's not the number of contracts you trade with, it's where is your stop loss and how much can you afford to lose on a trade. So if say you have a 50K account, all right, if you're on a combine and you're willing to risk $500, okay, that's fine. That's probably 2 micro contracts. So, focus on the dollar amount of your losses and not the contract size itself, so that you can put a meaningful stop loss somewhere, not just some arbitrary place for a number that you don't want to exceed. Does that make sense? Because if you are focusing on a number you don't want to exceed, then what's going to end up happening is you're going to feel like, okay, well, that's a loss I shouldn't have taken. I need to make that back if it ends up going your direction. And you're going to end up blowing your account up, which you don't want to do. So, focus on the dollar amount that you're risking, not the number of contracts. The key that I think a lot of people, the vast majority of people that say they're struggling with trading psychology struggle with, is they don't have a set methodology, set model, whatever the heck you want to call it. They don't have strict rules, entry rules, exit rules, stop loss rules, sit on my hands rules, and those rules will be what save you. But you have to have rules that you will adhere to, or you just have to adhere to the rules that you have, period. Because the vast majority of time, what will happen is people will make rules, and they're like, well, rules are made to be broken, I'll just do it this one time. And then you end up getting into tilt or FOMO or whatever and making a really big mess out of things. You can't let that happen. So here are the rules that I use for my entries, okay? I look for a high time frame liquidity sweep, whether that is a previous session high or low, previous day high or low, or something like that. I look for that. And then I look for some kind of change in the state of delivery, whether it's an inverse fair value gap, or whether it's the 2022 model, whether it's the unicorn model, something like that on the 1 minute chart that gives me a fair value gap that I can use. And I have to have an SMT with ES. If I don't have those things, I should not be taking a trade. And that's how I take my first trade in the market every morning when the market opens. If I don't have those things, then I don't take a trade. If I can't get a fair value gap in the direction that I want the trade to go in, or that I expect the trade to go in, then I'm not going to get in. So you need to define what your entry rules are for you. What do you have to see? What do you have to have? What makes sense for you? For me, there are a lot of times where I get tempted to get into a trade, but I don't have an SMT. All right, well then I'm not going to play a reversal in that case. That's for sure. And I'm probably not going to try to play a continuation either, just because I don't know what it's going to do here. Now, once I get an SMT, then I'm good to go. And just so you guys are aware, it's not an SMT until that candle closes. So if it's a 15-minute candle, it's not an SMT until that candle closes, and you can see for sure that ES took a higher low, or NQ took a higher low that the other one didn't. You can see those on the 1 minute pretty easily. So if you have the 2 1-minute charts, instead of doing like the 3 chart like I do, if you do a quadrant view where it's 4, you can have the 1 minute for ES and NQ as well as the 15-minute for ES and NQ, and you'll be able to see those maybe a little bit easier for some. But yeah, focus on those rules. And, hey, you could treat it like you're back to trading options and say, okay, I have only this much capital. I can only take this many trades a day. If you're a scalper and you like to scalp and take a lot of trades based on levels, okay, that's fine. But set a number, set a max number of losses that you can take. So if my stop loss that I set on my 50K account is $300, my max loss for the day is $1,000. If I lose $1,000, I'm done. I'm not trading anymore. Or if I lose $500, I'm done. I'm not trading anymore. Whatever that is for you, that needs to be it, and you lock it up. Do not feel the pressure to try to make it all back in the same day. Yes, you may have done it before, but that doesn't mean you'll do it again. And I guarantee you, if you stack the days up to where you did make it back versus the ones that you didn't make it back, the ones where you didn't are going to outweigh the ones where you did. So accept the fact that, yes, you're going to have losing trades. You're going to have losing days. It doesn't matter what method you use. It doesn't matter what the size of the trade is. You're going to have losses. And so with that in mind, if you need to avoid risk of ruin, the whole idea in risk management is to avoid risk of ruin. You have to be able to trade for tomorrow. If you can't trade for tomorrow, then you're gambling. If you're going all or nothing, then you're gambling. And I know in Oasis we joke a lot about degenning and all this kind of stuff, but people don't do it. We just degen, or they're like, oh, it's all or nothing, and well, that's fine, but not everybody can. One, not everybody can afford to constantly pay for combines like that. Two, it's really not going to help your psychology either way in that regard. If you win, it's going to make you feel invincible. If you lose, it's going to make you feel like you can't do anything right. So do not do that. You have to avoid risk of ruin. So understand the maximum size you can take, under the maximum loss you can take per trade based on how much money you have in your account size, whatever, and what your win percentage is. If you have an 80% win rate, all right, then you can afford to take a few losses in a row. If you were flipping a coin, all right, if I had a quarter and I flipped it, it should be statistically 50-50 on whether it's heads or tails at any given time. However, I guarantee you, if you flip it enough times out of 100 or 1,000 or whatever, you'll have a stretch where you get the other side 5 times in a row. Maybe you'll get it 10 times in a row. The same thing can happen with your trading. You can take several losses in a row. That doesn't mean what you're doing is wrong. That doesn't mean what you're doing needs to be tweaked or changed or anything like that. What it means is you gotta let the numbers play out, because what will probably happen is you'll have an equal number of wins in a row or greater number of wins in a row, depending on what your win rate is. So if you have a set system, which is extremely important, you have to have a set system. Use that system. Do not deviate from it. Use that one system for a whole week. Use it for a set number of trades. What book was it? I think it was not The Mental Game of Trading. That's one of the books. He talks about having, if you're going to try a strategy, you try it for a set number of trades, and you don't do anything else for that set number of trades. I don't care if it's 20 trades, 100 trades, 50 trades, 10 trades, whatever. Use that strategy for a set number of trades. It's trading in the zone. You're right, Anki. Thank you. Use it for a set number of trades. Do not deviate from it. Once you finish that set number of trades, you can go back and you can review in your journal and say, okay, here's where it worked. Here's where it didn't. Here are some enhancements or improvements I can make. Here are some things that I'd like to change. That's entirely how I built my entries, and when I take them in the morning. I look for a high time frame liquidity sweep. I'm looking for what direction are we headed. Now, there are times where that high time frame liquidity sweep happened in London session or an Asian session. Maybe we took the previous day's high or low, and I'm looking for continuation. Yeah, I'm recording it, Anki. And I'm looking for continuation. Okay, well, now I'm going to look for some confirmation once the market opens. Are we going to go into a fair value gap or an order block and when the market opens at 9:30, that's going to give us that continuation? And those are the kinds of things that I look for. So I look for that high time frame liquidity sweep. I look for SMT, and I look for a fair value gap of some sort somewhere. I don't care how it gives it to me. I don't care if it's an inverse fair value gap. I don't care if it's a unicorn model. I don't care if it's 2022 model. It can be any of those things. But if it gives me the three things that I talked about, then I know I'm probably going to be in good shape. I might take a loss getting started. It also helps if I have daily bias going into the day and I understand the weekly profile. But those are kind of extras for my strategy. What is your strategy? How are you approaching the markets on a daily basis? Are you charting, ahead of time? Are you marking everything out? Are your key levels, order blocks? Are you looking at the 1 hour and the 4 hour and the daily? Or are you getting so stuck on the 1 minute that you're all over the place and you have no idea what the market wants to do? Once you have a set strategy, your mindset will start to take care of itself. Your psychology will start to improve. It'll start to change. You'll start to understand the rhyme and the rhythm of how this works and what is working and what's not working for you. And once you have confidence in your system, then that alleviates a lot of the pressure that you're putting on yourself. Because what you end up doing when you don't have a set system and you're just kind of in and out all over the place and you're not really paying attention, you start to tell yourself, I don't know what I'm doing. I suck at this. I need to just quit. I'm never going to be able to get this right. And you start all this defeatist talk that will never get you anywhere, because what your mouth says, your ears hear. What your ears hear and your mouth is saying about yourself, you're reinstilling into your mind, and that will never get you the results that you want. And if you want a deeper dive into how that works, then the book by Dr. Caroline Leaf, Managing My Mental Mess, is fantastic for that. It'll help. So what you need to understand with all of that is there's nothing you can magically do to fix things. This is one of those things where you have to look at yourself in the mirror and you have to say, okay, yes, I'm a good trader. Yes, I can read the markets. I can identify key levels. I can identify where price wants to go. I understand what liquidity is. I understand that price goes internal to external and external to internal, and et cetera, et cetera. I understand the fundamental pieces that I need in order to be a successful trader. So what I'm going to do is I'm not going to focus on dollar amounts, which is what gets a lot of people messed up. We think, oh, I missed that move. I missed out. I could have made X amount of dollars. Forget it. Doesn't matter. There's going to be another move. You have to let that go, Benny. There's always going to be another move. I promise you, if you've missed out on a good chunk of this drop, guess what? There's going to be another one someday. It might take a few years. It might be tomorrow. We were already down over 5% on the night tonight. It could be every day for the next 3-4 months. It's hard to say. there will be another day, I promise you. Greed, the best way to handle greed, and I would, again, for a lot of these problems, Benny, recommend the mental game of trading, because he does address a lot of those specifically and gives you tools on how to deal with them. But the market's always been around, and it's over time it goes up. I mean, even from the Great Depression, it ended up going up. and bleeding from the long term, if you believe in where you are in the long term and the companies that you're investing in, then you're good to go. If not, that's part of trading. You need to figure out, okay, where do I want to set my stop loss on this long-term port, and what do I want to put it into? How do you want to manage that? So that's just another trading thing that you need to focus on. But there are so many different things that can happen. And, when it comes to greed, Benny, the best way to handle that is you've got to take the dollar amounts out of it. I know that a lot of prop firms, they really kind of encourage greed, because when the combine, you have to make an X amount to pass it. Once you're funded, you don't have to make an X amount. Now you have to make good trades. Well, the key to passing a combine is if you make enough good trades, you're going to hit the amount you need to hit to pass it. Don't feel the pressure to make X amount of dollars a day, because the reality is the market is not going to give you the same range every day. What it's going to give you, you have to be willing to maximize on. And what you'll see is over the course of a week, over the course of 2 weeks, over the course of a month, you'll get to a given average over that amount of time. And it'll probably be the average that you're looking for if you can seize the day as is presented to you. If you try to make something out of nothing, then that greed is going to absolutely kill you. So that's where you have to just take, okay, the range overnight was X. That means that today we're probably not going to have a very big range. Or tomorrow there's FOMC, so today's probably going to be choppy. Or we've got CPI on this day, or NFP, or whatever the thing is the next day that can make the market have a smaller range. You need to just accept that and play the range that's given to you, and then plan for those trend days and let those runners run on those trend days. So when you let those runners run on the trend days, or from news or whatever, that's where you can make up a lot of the opportunities that you potentially missed out on before. So you don't greed. Probably, you have to be greedy to be a trader, because you want to get good entries. So greed is not a terrible thing. What you need to do is probably set a rule in how many trades a day is enough. And if 3 trades a day is enough, you can probably make everything you need to make in 3 trades a day. Even if 1 or 2 of them's a loser, you can probably make a pretty good amount on 3 trades a day. If you take 3 losses, then you probably need to be done for the day. So, you need to understand that you're going to have some losing days and some losses. There are going to be things that happen that you can have everything right and still take a loss, because you can have the perfect entry, have your take profit set at the perfect level, and then President Trump can come out and say something and a huge reversal happen and it go against you. That's not your fault. You did nothing wrong, but you still took a loss, which is why you have to make sure that your risk management is on par with where your expectations are, where your account is. So does that make sense? Does all of that make sense to everybody? Ninja did a great job summarizing all the points so far.
Jimmy, can you hear me?
Yeah, I can hear you.
Hey guys, it's Benny. Hey, I guess I'll just be transparent. My problem lately has been, I'm so rigid and very disciplined in other things in my life, and this one is absolutely killing me. Like, it's affecting my mental health in a weird way, because what is enough? Like, I don't know. I think, Jimmy, I DM'd you. Like, did you hit a wall where it's just like, okay, I need to make this back? It's, is 4,000 enough? Because I think I'm getting good entries. It's a matter of, like, I've tried everything. I put pictures of my family in front of my screen saying I'm doing this for them, all kinds of stuff. So I'm kind of hitting a roadblock. I saw your book that says Managing My Mental Mess. Um, and that's where I'm kind of at, like
Yeah.
this past week, I had days where I was up $5,000.
Mm-hmm.
For most people, including me, that's enough. I
Mm-hmm.
could have probably done the minimum 200 each day and probably got a paid out. And that wasn't enough. The next day, I'm getting into entries. Trump spoke, and then I probably was sitting in a dark place for the rest of the day going, I can't believe I just did that.
In that, those things, losses happen. Now, here are some things that you need to try to do, okay? And here's just some general rules for everybody. If you make 1% of your portfolio in a day, so if you have a 50K account, if you make $500 on that 50K, you're beating the vast majority of traders in the market at 1%. If it's 150K and you made $1,500, that's 1%. You're beating the vast majority of traders in the market. If you can compound, take a 50K account, one 50K account, and you can compound that 1% a day and take out $20,000 a month in payouts, a year later, you'll have over $600,000 still in that account. So what you need to understand is some perspective. 1% a day is a game changer. What you can't do is allow yourself to lose much more than 1% a day. But if you can compound 1% a day as your account grows, then you're going to be in great shape. So for you're trading 150Ks. You're making, you have days where you make over 3%. Dude, that's a fantastic day. That's great. You need to accept that and be like, all right, this is great. And if you have a day where, set a goal for the day. My goal for every day is to make 1%. All right, great. So on a 50K account, that's $500. My goal is to make $500 today. If I beat that, say I end up $1,000 for the day. Okay, I need to make sure that I stop trading it if I get back down to $500 because I want to lock in my 1%. And what you can do is as you increase your gains for the day, is it gives you the ability to leverage up a little bit more, right? You can take on a little more size. It kind of opens some things up for you. But you need to really focus on some perspective. 1% a day is an amazing goal. If you can make more than 1% in a day, great. And you'll get that over time. You'll get to where you're making 3 to 5% a day. But you have to be careful how much you're risking to make that amount. So you make $500 a day but lose $1,500 another. Again, Anki, that's going to be, and you need to focus on the percentage of your portfolio. So what you don't want to do is you don't want to have those kinds of scenarios where, all right, I make $500 a day, but I lose $1,500. If you're only averaging $500 a day, then you don't want to lose more than $500 a day, and that's just where you need to stop. If you need to size down in order to accomplish that, then I would do that. Right now, with the market like it is, you can trade one micro and make more than $500 a day. So you could also lose more than $500 a day if you're not careful with one micro. So I would say that just as a general rule for everybody, while you're trying to build your confidence up, and just some strict rules to have in place for the time being are: one, have a set strategy, set of rules that I must have in order to take an entry. I will only risk 0.5% max on a trade in order to make 1% on a trade. So you want to try to get at least a 2 to 1. On a daily basis, if you only risk 0.5% and you're shooting for 1%, on a 50K account, that means you can lose $250 or make $500. Right now, only risking $250 is really difficult just because of the volatility in the market. So if it stretches slightly to $300, don't beat yourself up. It is what it is. Okay? Just kind of take it and run with it. But once you hit that number, you have to stop. And so that needs to make you very selective about the trades that you get in. If it doesn't meet your criteria, you don't take it. I think one of the worst things a lot of these prop firms have done is take away the daily loss limit, because that has made people much more likely to gamble on accounts in order to pass them. And then and then it gets your emotions get out of whack when you get a funded account and now you're down. Man, on a 50K account, if you're down more than $1,000 in a day, you definitely need to stop. That's 2%. You need to stop. 1% a day should definitely be, okay, I'm down 1%. I need to just go take a deep breath, or I need to take the day off, or time myself out. But, do something. But you've got to figure out a way to manage that. So good risk management would be risk 0.5% to make 1%, and go with it. Yeah, well, it's either walk away or flip my desk, Ninja. So, and I don't want to tear up my stuff. So, I mean, sometimes you're just not. Sometimes, man, you're just not seeing the market right. Like you can have any number of things going on that can kind of blur your vision of the market a little bit. It can be kids being at home, being needy. It can be pressure at home from either relationships or finances or both. It can be people asking questions in chat nonstop, people acting silly in the lives or the chats or whatever. It can be a lot of things that really blurs your vision of the market. And one of the things that I think is super beneficial that not enough people do is when you're not sure, just wait. Just wait. I promise you, another opportunity is going to come up over the course of the day that you'll be able to trade. Price will hit a key level or break a key level, and you'll either get a continuation opportunity or a reversal opportunity. It's going to happen multiple times a day, every day. So if you're unsure, just wait. Patience, I get it, man. We lose patience when we put pressure on ourselves. See, trading is the one thing that you can't just work harder at and make more money. You can't trade more and make more money. Like if you want to get fit, you go to the gym, you work out really hard, then you get results. If you're starting a business, you put a lot of hours in, you work, you grind, you do all kinds of stuff, you get results. If you're anything you do, you work harder, you get results. With trading, you can't trade harder. You have to just take some time and wait. And Trading in the Zone talks about patience, and I understand, Benny, as an entrepreneur, it's difficult because we always think, okay, if I work harder, if I do it harder, if I just more time and more this and more that, then it'll turn around. Man, trading doesn't work that way. You have to be very zen when it comes to trading. You have to take a deep breath and understand that you don't have all the answers, that the market is going to do whatever it's going to do. And I want to seize my opportunities. Here's some additional perspective, guys. You will see people putting in the chat, oh, I made X amount of dollars. I made this. I made that. One, some of them are lying. They're using practice accounts and they're not saying it. That happens. Two, these are the same people that don't take regular payouts. They don't, they're not profitable. They have boom and bust days, which, okay, great. You made $10,000 today. You lost $12,000 tomorrow. That is not long-term success. Long-term success is going to come from following your rules. That's where the bulk of your trading psychology is going to benefit from having set rules that you will adhere to, that you will listen to, and that you will operate by. And I don't really care if you're just using the 9 and 21 EMA flip, and that's what you focus on. Okay, when the 9 and 21 flip, then I go the other way and I ride that until it gets back to under the 9 EMA. Fine. Those are set rules. I am all for it. If they're set rules, then that's great. If they're not set rules that you can operate by, then don't do it. You're not happy about the average down chatter in Oasis. Yeah, it's the market is not going to bounce back as quickly as a lot of people think. Where, I talked about this a week or two ago, where we're headed for a recession. And, some people, you're going to feel it in your long-term portfolio. And then, you need to either be at a place where you're comfortable with holding for a while, or you just need to get out until you're comfortable with getting back in. So, it's going to be pretty serious for a while. I think the bottom, could be in a 35 to 40% area, which is still way down there. We got a long way to go, and it can take a long time. And you'll get some dead cat bounces. People will think, we're going to recover, and then it'll drop some more, because that's market structure. That's how the market moves. It never goes down in a straight line. It never goes up in a straight line. So understand that it's going to be volatile. We're going to have some downside. We're going to see some upside, but don't go all in with a lot of that stuff. And these kinds of things can last a long time. And if this is the most difficult trading environment I've personally had, I started trading in 2021. And when I first started, I didn't know what I was doing. I was taking call outs from Champ and Fusion and whoever else was in Oasis at the time. I had no clue what was going on. So, I didn't really get serious about trying to learn how to trade. I did that later that year, but, when I first started, I had no idea. But, just have some set rules. The risk management rules are going to help keep your head straight. And what you need to understand is that any system at any time can fail and will take losses. You can be, say if you're going to Las Vegas and you're a card counter and you want to go play blackjack, you're not going to win every hand. What you're trying to do is you're trying to maximize the good hands that you get, so that when you win those hands, you come out ahead. And the trading is the same way. You're not going to win every hand. You're going to take some losses, and you need to accept that. So having a set system will help with that. Risk management will help with that. Again, try to go by some rules, especially, Benny, when you're struggling with greed. And when you break 1% in a day, all right, then your stop loss goes to that 1% level, and you sit there and wait. And if you finish above 1%, dude, pat yourself on the back. If it comes back to that 1% and closes you out, dude, you made 1%. Fantastic. Compound that.
I think on that, and I just wrote down what you said about combines. Like, I don't have a problem passing combines because it's going to cost me $140 or $40, whatever. I don't need to rush that fast with XFAs. That's kind of almost like what you said. Treat it like your own money, right? You don't
exactly.
It's 4,500 in 2 days. You could take 2 years to do it if you wanted to play slow.
Let it take the time that it takes. You don't have to force it. It is what it is. Just be patient and let it happen, because, like I said, the vast majority of people that you're going to see in chat in Oasis, those guys, they're passing combines, but they're not taking payouts. Oh, they're not taking a lot of payouts. And the reason I know this is because I get DMs all the time. Oh man, I was so close to a payout and I didn't get it. And I'm not going to air anybody out, because that's not my place. But you need to understand that just because somebody's making a lot of noise doesn't mean they're making a lot of money. So don't let that put pressure on you either. Just take it for what it is and be like, okay, I'm happy for them. That's great. Yeah, most of them are super young. Yeah, I'm right there with Yankee. I am not young. I have a family to feed. I have to make sure that I keep myself straight. So you got to worry about you. So that's why you have rules for your entries, and don't worry about them. Now, if you want to say, okay, I'm only going to take an entry that is off a 15-minute fair value gap, and then I get a 1-minute market structure shift with a fair value gap and an SMT. Great. That's a system. Use it. Make sure that's the only one you use. Use only one system, one method, one model, whatever you want to call it. Use only one for 20, 30 trades and evaluate that. Find out what works, what doesn't work about it, and then tweak it. Then do it again, and then again, and then again. And you'll see how your psychology improves over time just by doing the same thing with the same rules over and over and over again. I think too many people feel pressure to make money quickly, and they use too many different strategies, or they strategy hop, or they try to put too many different things together at once in order to make things work. Man, just take a deep breath and watch the charts if you need to. It's okay. I promise you'll get another opportunity. Yeah, you might miss out on one. There'll be another one in an hour. Just, it's okay. Take your time. It'll be okay. Any other questions, comments? I think he's typing something. Good. I'm glad it's useful. I'm glad.
Rejected. Order filled.
If, yeah, sure. Go ahead. You're not muted. It's just you're muted on your end. You should be able to talk, I think. Yeah, Benny can talk, so you should be able to talk. I don't know. What the deal is there? You're not server muted.
Jimmy, what was that book you mentioned? Managing My Mental Mess? No, but
yeah, yep, by Dr. Caroline Leaf. I mean, really,
Caroline.
Yeah, she's got a couple of good books. Here, I'll give you a whole list of. Yep. Yeah. Another really, really good one by her is Switch on Your Brain. Switch on Your Brain is probably my favorite one of hers. The Psychology of Money is another really good one you guys could listen to if you want to understand more of the technical behind the scenes of markets. You could read Dark Pools. Yeah, Anki, that's not a bad idea. You could definitely just stop until the market settles down. Use a practice account. And until you kind of get used. Now, with the volatility, basically you got to shrink your chart down, or space it out differently. And I've talked about this in lives a lot. Like during the Biden administration, I think on an average day, my chart would for NQ would be 4 to 5 points, is how I'd have the side of the chart spaced out. Now it's like 10 to 20 points, and the candles are absolutely insane. So you have to definitely size down, but yeah, if you're having trouble passing, you just take a break, work with a practice account for a little while, and hone your strategy and your psychology with that practice account. But you have to make sure you do it in a way where you're operating by the exact same rules. Otherwise, you're not building any kind of foundation. All you're doing is playing make-believe. So yeah, you'll be building terrible habits. I mean, a lot of people will use a practice account, but they'll use it to build absolutely awful habits. You don't want to do that. Treat it like it's the exact same thing. Make sure your expectations are the same, that your entries and exits are the same, that your risk management is the same, and then you'll be in good shape. Any other questions, guys? I hope this has been beneficial. I know Ninja's got a ton of books in the education tab here. Feel free to go take a look at those. And I love books. I think the books are absolutely great. So, All right, guys, I appreciate it. I will get to recording as soon as it finalizes, and we'll see what happens. I mean, honestly, Yankee, I think the market goes down. And we've got FOMC this week. We have CPI and PPI. I just think downside is the way to go. So you just look at the higher time frame, see what the context is, and go from there. All right, guys.